David C. had asked, question for the end, what is the default PowerOptions criteria? I'm assuming we're talking about naked put positions, and that depends which default you are looking at. Okay, so let's go into that search tool again, David. And this one here is the weekly picks of the day. And you also see it has its own link here. Now I'm just going to go to the basic link. The weekly picks of the day here is the result of extensive testing that Ernie did, testing various iterations of stock and option criteria to find over a certain testing period which naked put structure, range out of the money, premium, stock filters, technicals, and fundamentals gave the best return over that whole time period. And these are the results of those, and he goes through a description here. Now, David, when I go into the search for any strategy, as we were there before, I see that this is my default. You ask, what are the criteria? I just have to simply scroll below, and as you saw, the original criteria here, this is the basics that Ernie was looking for. In any strategy, you can screen for the options criteria, stock technicals, various stock fundamentals. Ernie's looking for, and what he found with the weekly trades, excuse me, David, is minimum naked yield of 0.5%, 0.5% to break even, wants to be 2% out of the money, minimum bid price of 20 cents, some basic volume and open interest. Doesn't seem like a lot. Stock technicals, looking for stocks trading above the 20-day moving average, and some basic fundamentals here, positive earnings per share growth, avoiding earnings between now and expiration. There's some other things there to limit the bid-ask spread, to avoid those things, and only looking at one result per security to keep the lists down as well. But that's if you want to do weeklies. If you wanted to do monthlies, sorry about that. In our default searches here, there's also the monthly picks of the day. These various ones are searches that I've saved, David, during these webinars, mostly looking at high IV naked puts, weekly high IV naked puts, things of that nature. In any case, the tip sheet out of the money puts are more conservative, looking 30 days out of the time, deep out of the money, smaller return for 30 days out, maybe 1%, 1.5%, but with almost an 8 or 10% to break even, 8 to 10% out of the money, plus the premium. And also the monthly picks of the day, a little bit more aggressive, looking at a little bit more volatility, 30 days out, but you see 5% returns, 4.8% returns, and more. In each strategy, there is a variety of criteria that are set for you to use as default criteria to use as a stepping stone based on whether you want to trade monthly, whether you want to trade weekly. Maybe you want to look just at indexes and ETFs. For example, if we go into the bull put credit spread search, the basic search, David, and it always takes a little bit of time here. I think it's because the history is building in the background right now. More than likely, David, this is going to come up with what's called the weekly bull put credit spread search. This is my preferred screen, similar as Ernie did various iterations of testing for the naked puts, and you'll see those picks of the day also in covered calls as well, monthly and weekly. This is my preferred search for the bull put credit spread. It's looking 2 weeks out in time with, again, some not minimum, but some criteria that was tested, 9% return, 3% out of the money, 85% probability or higher. Also stocks trading above the 20-day moving average and a positive MACD cross for the last 3 days. Some basic fundamentals, avoiding earnings between now and expiration. This is what I prefer to use. I'm not directly recommending or suggesting that you use it, but it's been very profitable for me with the approach that I use. Oh, that's interesting. That one shouldn't be in there. I see the Shake Shack one in there with the 0 bid. I thought I had that in there as a criteria. I guess I don't. That's something I'm going to change. We did that for David last week, David H. We're talking with David C right now, but for David H, last week we talked about some ideas to fine-tune your bull put credit spread search because he was seeing things he didn't think were possible to get filled, comparing the return versus probability in that case. And sorry, distraction. Sorry, folks. Domino's Pizza at $4.95. That's a whole horror story on my account, but we won't talk about that. Something I might address later on that I'm actually going to start doing in 2021. I know some of you might already do it, but I'm actually going to start doing it in 2021 because I'm getting frustrated here seeing some things that I missed the boat on years and years and years ago, but who knows? But what's wrong with having $130 set aside and 10 shares of stock and now having it $4.95 8 years later? Anyway, so I'm sorry, David C. Now, as I mentioned, there's defaults in here too. The bull put number one, it's more out of the money, more conservative, I'd say. And initial values is just a real basic starting point looking for a good probability and a good return ratio. But in each strategy, David C., we also have what's called sample searches. These are basic themed searches. They might be a little bit more conservative in this case, but are still very useful. Might not be hitting the targets I want, but are very conservative. For example, in bull puts, there's the ETF bull put search. You can see here it's looking 10 to 31 days out in time, 5% return in an uptrend, sorted by highest probability of expiring worthless. The 5-star bull put search, looking just for high-rated stocks by the S&P, Standard & Poor's, at least 4% out of the money. And safety first, bull put credit spreads just on large cap stocks over 10 billion with a high probability of expiring worthless. And in any strategy, covered call, you'll see the search and sample searches. You go to calendar call as well. And of course, we mentioned the covered call and the naked put have those picks of the day. To me, the bull put credit spread, the weekly bull put we were just looking at is my bull put picks of the day. And then the married put search, where we follow the radioactive trading techniques as discussed in the blueprint. The default search, radioactive sorted by earnings per share growth would be where I would start if I was picking a married put today position to open in that case. Okay, and on that note, very quickly, there you go. So these three trades here from October 25th, I'm sorry, the trade date of October 25th, these are the three bull puts I traded in this cycle that came exactly from that list. 14% return, 17% return expired worthless, and 17.6. And I did more contracts here, but I just put them into our webinar account as that case as well. Okay. All right. And of course, a month ago, for those following radioactive trading, maybe some of you are in the Fusion portfolio. A month ago on October 12th, of course, we entered the ESI position at 22.63 with the 25 put. We rolled that up yesterday when the stock hit 25.50, 25.40. It's now at 26.03. So I used one of the income methods there described in the blueprint. So essentially, after 26 days, we now have a bulletproof position on ESI with further upside to go. It has no risk on the position after rolling the put up from the 25 to the 30. Paid a $3 debit to gain 5 points, so it became a bulletproof position. We're out to May on the insurance, so we have another 196 days to go. And hopefully as the stock goes higher, which we'll get to that discussion in just a moment, as the stock goes higher, we will start selling the 30 call. Maybe do that income method number 6 we just saw a little minute ago for Ben to get premium, increase the bulletproof, no risk status guaranteed profit on this position, increase potential profits, but leaving the upside open as well. All right. Now, that brief discussion on hoping ESI continues to move up higher, where it's at 26.03 now, hitting new points. Before I jump into that, David C., you are welcome. That's just a review of some of the search. And of course, the whole point of the search tool is, yes, we've put in our thoughts. Okay, let me just go back to, let's just say the bull put credit. We've put in our thoughts and done testing for screens that we feel should and will work over different market conditions. But the whole point of this tool, as we showed at the beginning of the webinar, is that you can customize this any way you want to meet your needs. If you had a specific implied volatility you wanted to look for, or a percent implied volatility range, say in covered calls or cash secured naked puts, specific volume or open interest. If you're looking at covered calls, you have a specific stock price range you wanted to limit it to, or you wanted to look for certain technicals. You've got Bollinger Bands, RSI. you can use our defaults as a stepping stone to customize it any way you want to. In addition to that, David C., you just mentioned you had just started and you had just signed up recently right before the webinar, coming from a YouTube video. Remember, anyone who's on the free 14-day free trial can schedule a free coaching session. This is essentially a 35 to 45-minute phone conversation with myself or Ernie. We'll walk you through the tools on the site, kind of as we're doing today, but just as a one-on-one discussion, get you to where you need to get started, get familiar, and start getting going with what you want to do and how you want to use PowerOptions to manage your trades. All right, so you want to check that out too. While you're on your trial, you can schedule a coaching session at any time, or just email us anytime as well, or just call us during market hours with any questions that you have. Fernando says, in the custom spread, is there a way to see delta on the option that I add? Not immediately. Okay, so what is he talking about? Earlier on the fly, we built that covered call on Apple and that stock position with the naked put for Ben to show him that position here. So let's just say I wanted to do a bull put credit spread next week on MDB. That's one that worked out good this week. Not a recommendation or suggestion. I just want to see the numbers. So I'm sorry there, Fernando. The stock's currently at 555.58. Okay. Now, unfortunately, if I say, okay, yeah, let me do the 510. Ooh, that does look pretty good. No, it doesn't look as good as I thought, but let me do the 510, 500. And I'm going to sell and buy. Okay. Now, right now, at this point, all this tool is doing is allowing me to input strikes that I'd be considering for a spread position, covered call, buying stock and adding a married put, a collar perhaps. It's not looking at any data. It's not looking at the option chain at all. Now, I submit this, and yeah, that's right in my wheelhouse, isn't it? 14.3%, that's what I look for. I'm a good range out of the money, but how far am I out of the money? What is the probability or the delta of my 510 put that I just randomly put in here thinking it was a good idea? I'll click the more information button now. I'll go to research and I'll go to option research. And here now I see the probability above 81.7. Not going to do it. Delta of 0.17. What do I mean by not going to do it? I want to look for an 85% probability for my spread. Delta probably of negative 0.15 or greater. Less, thinking negatively in terms of the put option delta. So that's a fast way to do it. Now, what I'm going to say to you, Fernando, is that if you have a stock position that you're looking to do an adjustment on or elaborate spread on top of your stock, or you're looking to open up a spread but on a specific stock, and you know that you want a specific delta, and you're going 10 to 14 days out, I'd say first just go to the chain and go to the chain, and I'll go to the 14 days out, November 19th. Sorry, folks, I just want the put chain, and I already cleared everything out that I said I was going to look for, but I'll stick with the probability. So if I'm trading one of these, what do I know? I'm going to the 505 or the 500 in that case. And I'd have my delta here, Fernando. I have my probability here. So I'd say, okay, I obviously got to go to if my criteria is an 85% probability, the 505 isn't giving me. I could go to the medium chain, but I can tell you right now, I got to go to the 500 and the 495. Okay, so now I know. I got to go at least the 500, and will clear these out. Will that 500 with the probability I want now give me the return that I want in that case? Right? So what do I have to do now? 500 and 495. I know it's not going to give me the return I want because the higher strike didn't. So there's no way this one's going to, even with midpoint prices. What I mean by the return, I want a minimum. I want to be around 12, 13, 14% to hit my goals. This is only 9.9%. Had the probability I likely wanted and the delta I likely wanted, but it's not giving me the return in that case. So once you input the data, Fernando, because when the selection here is not interacting with the chain, and we're trying to keep this simple because this is just building positions, even simple as buying calls on the fly. So it's not interacting with the data in the option chain or the database. It's just saying, hey, put in this thing, then tell me if you want to sell it or buy it. Then we'll tell you what your graph looks like. But then I can further research and analyze the position, look at the option research, see all the information on my deltas, gammas, thetas, probabilities for this particular option, whether it's the sell or the buy in my spread. Or, of course, I could just go to the option chain and then look to see if it matches that criteria that I wanted to see, Fernando. This tool is designed to be more simple, just to plug and chug. Hey, I want to open a spread on Apple. I just want it to be this. If I know, again, that I wanted to open a spread on Apple with at least an 85% probability, and I want, or the 15 delta or less, for example, and I wanted to see what positions were potential regardless of strike difference, I do the same thing that we did for David C. No, it wasn't David C, was it? It was pretty sure it was probably for Ben. Yeah, it was for Ben. I'm sorry. When we did that for Ben earlier on the naked puts, Fernando, I'd go to bull put and I would just create a template. It's going to be simple as can be. I'm going to clear filters, but I'm going to keep my 8 to 17 days out instead of going to the straight standard expiration 42 days out that we did for Ben on that naked put against the stock position holding. Return, I'm going to put minimum of 12. Probability, 85. Of course, I could also do the short option delta greater than negative 0.15. I have to think in reverse because negative 0.13, negative 0.12 is greater than negative 0.15 because we're dealing with put options. I'm not going to put in anything else. That's all I want to see. And then I'll just go, now what I might do, I'm going to save this. It's going to look stupid for a moment, Fernando, but I'm going to save this. And you know what I'm going to call it? I'm going to call it one stock bull put template. Okay? And I'm just going to save that. I have too many results. System went across the entire universe of options because I would likely add other things, right? I want to bid greater than 1 or 2 cents to make sure it has, and I should put volume and open interest, but that's okay. I don't need to worry about that if I'm looking at Apple. This is not a search across the universe of options. If I was doing that, I would use my defaults, which included the technicals, MACD, simple moving average, RSI, earnings per share growth, no earnings between now and expiration. But now I can come into this template and say, hey, anything on Apple match this that I want to see for this 8 to 17 days out? 1, the 145, 144, net credit of 12 cents, 13% return with an 85% probability. Short option delta, negative 0.15. We were looking at MDB. Is that going to be here? Oh, there were a couple. Okay, so for the 19th of November, this is one of those ones that David H., who did have to leave, David, I'm sorry you had to leave, you had to log off there. It's unlikely to get this. There's something weird with this bid-ask spread of $1.30. I don't think I'd get this price. Or there's a reason why there's a wide bid-ask spread, and I'm seeing 26% returns with a 90% probability. Does MDB have earnings between now and expiration? Oh, no, it doesn't. So those bid-ask spread look, this is one that what David was talking about for last week, the archive that was posted, that doesn't look probable, getting a 49% return with a 91.6% probability above. And those bid-ask spreads are wide. Normally in my search, as you know, this is limited as well. The bid-ask spread is limited to 50%, and that took out the very high one. That's what I expected, okay? These bid-ask spreads are still a little bit wide, but not too wide. It'd be hard to get that 50 cents there and the 50 cents there, or the dollar really, but to get the 50 cents between there. Okay, so Fernando, that's the way you could do it. Now, I know you're trying to maybe analyze that, hey, I've got a covered call, I've got a strangle, and I want to see what happens if I add a put against, if I sell a put against my strangle, sell a call against my strangle. I've got a stock and a married put combination with a call sold against it, and I want to see what happens if I sell another put or a bull put credit spread against it. You want to look at the deltas. And again, unfortunately, on the custom spread tool, there's no way to do that because it doesn't interact with the other chain and option data. It's literally just grabbing the price. Sorry. But then once you put in the values, you can quickly look at it there, go to the research tool or go to the option chain. If it doesn't have the delta you want, the option chain could be very useful because then you could see which delta was there and then come back and plug it back in. There we go. Today's material are my thoughts on your questions designed for educational purposes, increasing investing performance and options knowledge. Any stocks or options discussed today should not be taken as recommendations or direct trading suggestions. Options involve risk and may not be suitable, of course, for all investors. Now, we had a chance to go through various tools today. We went through the search for Ben in the beginning. Well, not really a search, but we evaluated using some of the tools about the naked put screen. We looked at some of the rollout opportunities that would appear in the portfolio, even for just a stock position, converting to a covered call or a collar or married put trade before we analyzed his idea. We used the profit and loss chart, the custom spread tool, a couple times to evaluate risk graphs, different structures. We also looked at the search tool and different ways to use the search tool for specific screens and specific searches based on investors' needs. We reviewed the market sentiment tool and how we use that to manage our accounts. But if you like these tools, any of the tools you saw today, remember, you can take your 14-day free trial at any time. Just go to PowerOp.com, enter in your first name, last name, and email address, and that'll give you full access to the search, analysis tools, and more for 14 days, no credit card required. After that, subscriptions start at just $45 per month. That's for the end of day data service. There is the delayed data, 15 to 20 minutes delayed. That's $65 per month. The conversation we just had related to Brent, related to the historical service. The historical subscription includes everything that's on the delayed service, but full access to the historical data, which goes back to about 2014 and 2013. Of course, we do have a real-time service. You can cancel at any time. There's no contractual obligation for any subscription. Free coaching is available as new subscribers. So you can schedule that free coaching session. Again, this is a 35 to 45-minute phone conversation with myself or Ernie as well. We talked about the free education. We reviewed under the options concepts where to find some of those other presentations related to the market sentiment tool, or you could also go to YouTube, search market sentiment, search rolling in the money covered calls, search rolling covered calls, managing long calls, any of the topic generals. That's how we usually, general topics, I should say, that's how we title the webinars and tag the webinars. So any basic search you do and a strategy should pull up the ones we have for that as well. And of course, if you do think of any other questions at any time, remember you can email me at any time to support@PowerOpt.com or support@radioactivetrading.com. You can call us during market hours at 302-992-7971, or again, schedule one of those coaching sessions.